Hello and welcome to the weekly outlook. Just going through the calendar for next week, and we've got quite a few risk events coming out, so there should be some opportunities to look at those and trade. Now, the first one we've got coming out is actually on Sunday evening. We've got the prelim GDP on the Japanese yen. Now, we started to buy back the US dollar Japanese yen last week. The end on Friday due to what was becoming apparent that there was being intervention in the forex market from the BOJ, the Bank of Japan. Now we expect that to continue and for this to return back up to this 116 area in the mid-term. Now a prelim GDP quarter on quarter is certainly going to help. If that comes in poorer than expected. Now the previous was at zero point 0.3 and it's forecasted to come in at minus zero point 0.3. So we are looking at this travelling up a little bit further. So if not already in this trade, then when the market opens, I would try and take the opportunity to buy the US dollar Japanese yen before the prelim GDP quarter on quarter comes out. Okay, so that's the first announcement we've got coming in, and then we've got Chinese trade balance on Monday. Not expecting that to be hugely market moving. It may affect the Australian dollar, which seems to be clinging to these higher levels at the moment, around about the 7-1 area. Now we've got the monetary policy meeting minutes out on the Aussie on Tuesday morning at 12:30. Not really expecting anything different from that. Only a sort of reiteration on what Governor Stevens has said in the past. They're basically a neutral currency at the moment, and it will strengthen and weaken according to whichever currency it's trading against at the present time. Now against the US dollar, for instance, the US dollar is also starting to lean into a bit of a neutral currency, and hence you can see these little sort of long wicks on all these candles here, where there's quite a lot of indecision in the market to where this should be going. At the moment, I'd probably expect to see a little bit of consolidation. I don't think the monetary policy meeting minutes is going to have that much of an effect. Going down the calendar, looking at other Australian data, we've got unemployment rate and employment change again on Thursday. This isn't expected to change a great deal either. Now, if those figures do surprise either to the downside or to the upside, then obviously the Aussie dollar will act accordingly in association with that. Also, we've got the FOMC meeting minutes on Wednesday. Now, this is not just affecting the Australian dollar, and we'll go into some of the other currencies in a second, but certainly if there's any surprises there. Now we're not expecting to see any changes, in the meeting minutes from what we've heard come from Janet Yellen over the last few days. But if there is any surprises in there, again, it will affect the US dollar. Their tone has been fairly, I would say, neutral to maybe slightly on the dovish side of late. But then we have had some good data. We had a good retail sales figure coming out. The non-farm payrolls before that, even though the non-farm payroll dropped, we did have a good unemployment and unemployment rate came down. So we are experiencing a bit of sort of volatility on both sides in these things at the moment. So let's have a go through these major currencies, because the euro at the moment as well is looking quite interesting. We did have a solid rejection here from the 1,380 level, which was a really good price to have got into for a sell on this now, making it nice and easy to and nice and safe to trade this down. We are bearish on the euro US dollar overall, but obviously there is quite a lot of sort of support levels for it to break through, for it to continue on the downside. In the mid-term or short term, I would like to see it test 1-1, I should say, but it really does need to break back below the 112 at the moment. You can see it keeps rejecting this. We've got a strong area of support around about the 11220, and it rejected that on Friday. Did come back up, but then rejected the 127.8, the 11280 level again. So again, it's closed and given us a little bit of indecision in the candles here. So we'll see how that market opens on Sunday evening. But we have got some data out on the calendar next week for the euro as well, and we've got German constitutional court ruling, not too looking for that to be too market moving, but we've got ECB President Mario Draghi speaking at 2 o'clock on Monday. Now that is the one that may move the market. If he's particularly dovish, then hopefully we'll see the market finally realise that QE is on its way. Further, well, not further QE, but a rate cut is certainly on the cards, and hopefully we shall start to see this sell off. Also with risk, with the risk risk off that we've been seeing lately due to the sort of the global slowdown. We've had a lot of sort of safe haven flow going into things like the Swiss franc, the euro, the Japanese yen. So once we start to see those markets turn around, they did start to turn a little bit on Friday. I'm talking about the stocks. We saw like the euro stocks and S&P 500, the FTSE, they all started to have a little bit of a turnaround on Friday. So we might get a bit of a risk, more of a risk on sentiment, and hopefully we'll see traders be willing to risk a little bit more and trade that euro back down. The thing with the euro and the stocks, the euro stock 600 is to keep an eye on, is as the stocks drop, the euro starts to rally because the euro becomes more expensive when the stocks drops. There's a negative correlation there as well, so that's also one of the drivers for keeping that euro buoyant at the moment. But no doubt that it will come down eventually. Okay, so moving on, New Zealand dollar, we've got retail sales on Monday evening. Now let's have a look at the New Zealand dollar as a whole and go through those figures that are coming out this week. Now again, the New Zealand dollar has showed a little bit of promise recently. The employment figure was slightly better, but what we need to keep in mind is that Graham Wheeler, the RBNZ governor, wants to keep the New Zealand dollar weak, okay, because of their export, and it's going to help aids their economy having a slightly cheaper dollar, New Zealand dollar. They would like to see it sort of hanging around the 65 to 60 cents to the dollar level at the moment. It's a little bit elevated from that, so I'd expect to see this come back down. Now we have got retail sales figure, as I said, on Monday, and then going through into Tuesday we've got GDT price index, the dairy index. Now that makes up 7% of their GDP, so it is quite an important figure. But then going on, what's more important later on in the week is we've got the inflation expectations, or is that before? Since I've lost that one now. Inflation expectations, on the Tuesday. Now that is quite important because it will be interesting to see how the RBNZ has changed stance, or will change stance, if inflation is starting to look good. Now, don't forget, at the moment we've got the weak oil price, so inflation has been low. Although we had that good unemployment figure from New Zealand a while ago, employment is a lagging indicator of the economy. So if inflation expectations are still quite low, then we should see that weigh on the New Zealand dollar in the short term as well. So we'll see how those figures come out. But overall, looking for selling opportunities on the New Zealand dollar. Okay, the pound. Now, the last one we'll go into is the pound US dollar. This one is looking quite interesting for next week because we have got some good data points coming out on the pound. We've got the average hourly earnings. This is expected to get slightly weaker. The claimant count change is expected to get slightly better. But most importantly is we've got CPI year on year on the Tuesday, which is expected to come in slightly better at 0.3%. So if in fact we are, now CPI obviously is inflation, so if we are starting to see growth in inflation, then this could very well be the turnarounding point for the pound. Now, I had expected to see this drop back down to 14000, and you can see there that we've got a trading plan actually marked out on this chart, which we've been trading, which was for the sell-off at this point with a stop loss above here and a take profit down at 1.4. And this is where I was actually going to rebuy this. Now, what I'm going to do is I'm actually going to lock this one in, so the stop loss is at the entry level there. So just in case it does rally on the CPI data, then we've got nothing lost, and I may even look to rebuy above these candles here. Okay, so we've got quite a few things to keep an eye on. The three major currencies there, the Aussie dollar, four major currencies: Aussie dollar, US dollar, the euro US dollar, the pound US dollar, and also the US dollar Japanese yen are really going to be key focus next week. Based on what's coming out on the calendar. So hopefully you can make some pips and trade safe. Cheers for now.